Today was another big day for interest rates. Switzerland, the UK, and the Eurozone interest rates were all released today, with the Swiss National Bank raising the expected 50 basis points up to 1%. The Bank of England raised interest rates up to the projected 3.5%, and the European Central Bank also raised up to the expected rate of 2.5%. U.S. monthly retail sales data were also released this morning, but came out even lower than expected, dropping 0.6%. Tomorrow we have lots of flash service PMI data being released, so be sure to come back tomorrow for more updates. All right, so here we are in the Edge Finder, and I'm going to start by checking the market heat map like usual. Let's see how our currency pairs are moving so far today. The first thing I noticed looking at this, normally I start up here, but the first thing I notice is look at our indices. They are being just decimated today. German 30 down almost 3%, Nasdaq down 2.42%, S&P down a little over 2%, US 30 down 2%, UK 100 down almost 0.9%, and the JP 225 down 0.37% so far today. I would imagine, that is definitely all of our biggest movers to the downside. Right here are all of our indices, major indices. So indices not performing very well today. Let's take a look at some currency pairs though. Major currency pairs, these are our US dollar pairs. Aussie US down again. Wow, down a lot. Already down 1.82% on the day so far. And USD JPY is actually up 1.09% on the day so far. Moving right along, all of our euro pairs up. So we had that new euro interest rate data released. Interest rates were raised. And as a result of that, we are seeing some euro bullishness. All of our euro pairs being raised. Euro USD up 0.21%, but Euro AUD up 2.04% on the day so far. Pound pairs, we did have pound interest rates, but they are not faring quite as well. Pound USD down 1.05%, but Euro GBP up 1.27%. Our yen pairs are mostly up on the day so far, with Euro JPY up 1.28%, but Aussie JPY down 0.71%. Swiss franc pairs are looking a little split, but Aussie CHF really shooting down 1.44% compared to the Swiss yen, which is only up 0.88% on the day so far. Our Australian dollar pairs are mostly down on the day. Aussie USD again down 1.82%, Euro Aussie 2.04%. So that pair is doing really well so far today. And our New Zealand dollar pairs are also down a little bit today. Oh, I should have mentioned, we have new Swiss franc interest rate numbers, but those came out at this point. The Swiss franc numbers came out at like 2 a.m. Eastern time, I think. So those have been out for a while. So the market may have rebounded a little bit off that. The euro numbers, however, came out just a little over an hour ago. So the market still maybe has not had as much time to correct itself or to make other moves so far yet, with that new interest rate numbers just being released very recently. But New Zealand, let's see, NZD USD down 1.19%, Euro NZD up 1.37% on the day so far. Let's look at the watch list. I was looking at this a little bit earlier and I was getting excited. You know what? I'm going to leave the indices and commodities in here just for fun and just remove the neutrals just to see everything that we have. These are all of our buy and sell signals in the Edge Finder right now. And the reason that I was so excited looking at this is I've actually seen a lot of movement. We have lost Euro NZD was a strong sell for the longest time with a score of -9. It has jumped up, still a sell, but only a score of -4. GBP NZD was also, I believe, I think GBP NZD was the strong sell, score of -9. Euro NZD was also a strong sell, but no longer a strong sell. And we have 3 strong buys in the Edge Finder today. USD CAD, Euro JPY, and NZD CAD are all strong buys. US oil looking like a sell, CAD CHF, Aussie CHF, Euro NZD sells, CHF JPY, NZD JPY are buys right now. Our indices are down today so far, but of course that is just one day. US 30 and German 30 still looking like a buy according to the Edge Finder. But let's see, I want to take a look at one of these brand new strong buys. We did just get new Euro interest rate data, so this might be worth checking out, Euro JPY. Haven't looked at a yen cross in a long time. We did look at USD CAD earlier in the week, although it is our strongest buy with a score of +8. In NZD CAD, I've been looking at so many New Zealand dollar pairs recently. I think I'm going to stick with Euro JPY. So let's take a look at that with a strong buy score of +6. Euro JPY right here. So here in the Euro JPY page, we know that this is not actually a score of neutral. The Edge Finder is currently getting worked on. We have software developers working on this thing, updating this thing, improving this thing every day. So we know that it's a score of +6. We know that it's a strong buy. This neutral bias is not correct, but again, we know that it's a strong buy. These numbers here are correct. I will also point out, however, our interest rate data for the euro just came out a little over an hour ago, so it has not updated here. It would be a score of 2.5, but in this instance, it really doesn't matter because it's still much higher than the yen interest rate anyway, so it wouldn't have affected the score. So all of these scorings right here are still correct. We know that it's a strong bias, so we're going to look at these numbers anyway. COT data comes out to a score of +2, and retail sentiment comes out to a score of +1. We can take a look at our sentiment section right over here. Institutional traders very heavily favored short when it comes to the yen, 79.16% short, only 20.84% long, and there's a slight favoritism on the long side when it comes to the euro, 67.10% or 67.1% long, and 32.9% short. So slight favoritism long here, pretty heavily favored short here. Retail sentiment, retail traders are short as a whole when it comes to the Euro JPY pair. Our seasonality is a score of +1, and we can see that in our last 10-year average and last 5-year average, historically speaking, this pair does tend to do better in the month of December. We can take a look at those average price points right here. They are sitting above this neutral line right here. So historically speaking, again, in our last 10-year and last 5-year average, this pair does tend to perform better in the month of December. Now, however, that has not been the case so far in the current year average, but of course there is still time to turn that around before the month is over, and we could perhaps see it follow in suit and jump above this neutral line right here, meaning that it has performed overall better so far this month than it started as. Our trend reading is a score of +2. We can look at our daily chart right here. We saw some pretty solid downward momentum up until December 5th, and then it's been nothing but upward moves here. This looks like it was our level of resistance right here, potentially. I can only see back to November 28th. Today is December 15th. So this could have been a level of resistance here, or it could have been continuing a downward trend, but we popped up here, had a little bit of consolidation, popped up again, a little bit of consolidation, have popped up again. Perhaps this was the level of resistance where it shot back down, but it has moved back up again to this level of resistance, and our price forecast is predicting that it will continue on this trend and break through, creating some new highs. Our fundamental section is split here with GDP growth and interest rates coming in at scores of +1 and inflation and unemployment coming in at scores of -1. So we can see here in our fundamental section that Euro GDP growth currently sits at 0.3% compared to Japanese GDP growth at -0.2%. Euro unemployment 6.5% compared to Japan's 2.6%. Euro inflation is fairly high, all the way up to 10% compared to Japan's 3.7%. And then again, we know that new Euro interest rate numbers came out not too long ago, raising this up to 2.5% to help curb some of this really high inflation all the way up to 10%, where the yen currently sits at minus 0.1% interest rates. Again, not affecting the score here at all because the euro interest rate numbers is still higher than the yens.
Jello says, back at it with my favorite show. I appreciate you for saying so, and thank you guys. Shout out to the regulars who are here every day. We do this 9:30 a.m. U.S. Eastern every day through the week. Well, I should say, usually we do it at 9:30. Sometimes we make exceptions, like if there's a big news event, we try and stream the news. And I'm going to be honest with you guys, I missed news today. We are at the office, we're trying to figure stuff out because it's tricky. There's like this week has been so crazy, like forexfactory.com. This week has been so busy with news. And what we try and do is we try and cover the news events. And I look at the news event today at about 8:29 today. I'm like, anything going on? Let me go check. Sure enough, there's a big news event. So that is just on me. I'm messing up this week. I should have been streaming retail sales today. It would have been a good one to report because there was some heavy volatility. The good news is, for those of you guys hanging out with me, we still got commentary to do in the post event, but we certainly missed one there today as well. So we're dropping the ball a little bit. We're gonna fix it. We're gonna get it better. But here's some major moves today for you. Euro USD flying through the highs and continues to be bullish as we've talked about. For the last couple streams, we talked about the euro dollar and how this thing is just so strong right now. Continues to push through the highs, retreated here briefly this morning, only to find on the news event fresh buying for the euro dollar. The dollar coming down very, very hard. And yeah, Nick Data's daily line of Coke. I don't do any sort of stuff like that. Although I do love Coke Zero. That is my thing. Yeah.
Okay, well, take a look at gold. So a lot of people talking about gold. What's gold doing? Gold hasn't really done much. We were talking about gold on my stream earlier, but it's just kind of sideways here. I mean, I have been quite bullish on gold, looking at some buying opportunities for this one. I was hoping price actually pull back into this area this week, which is what I was talking about last week. Last time I was actually on the stream last Thursday. I was talking about this support level. Price never got there, and we had this rally and the market came down. And again, I was looking to see, okay, maybe this time we're going to get the test of this level at 1763, 1764, but we never got it. The market just pushed the upside during CPI on Tuesday, and now it's rolled back over. So gold for me is still correctly moving to the upside, but it's seeing a lot of downside, very impulsive downside moves, as you can see, which is not a healthy sign of a bullish trend. It's a sign that the market could be looking to maybe have a deeper retracement or maybe even reversal. And also, if you do look to the left just a little bit, you can see price is actually struggling to break through this prior high there around 1800. Again, big psychological level. So as for gold, we're actually really struggling to continue this move to the upside. So although I'm still bullish from gold and I'm still looking to buy the pair, I want it to pull back deeper. Reason being, we've got two signs here. The market's failing to go higher, a lot of rejection here as well, and also failing to break through those highs. So I don't really want to be buying up at these prices, because if I do, best case scenario, probably get, well, best case scenario could rip to the upside. But from an analytical point of view, best case scenario, probably get a move to the upside into the resistance, and the market will probably roll back over against me. So there might be some short-term buys on gold. I think a lot of you may be day traders potentially. I'm not too sure, to be fair, but if you are day traders, there could be some short-term buys at gold at this 1780 area. Maybe some short-term buys into this kind of area here, but I would start looking to take profit pretty quickly, because this impulse here could just be the correction of that move and then another move back down. So gold for me looks good for buys, but I want to see a move slightly further away from that level. Therefore, I can get a better risk reward, probably look to manage the trade a little bit more closely, and then exit the trade if I need to early, just because the market just may want to reverse. So it's a solid level, 1800, big handle. Market could look to topple over here. So it might be best to just be looking at short-term buys. If we get the breakout of the level of this zone here, gold could actually look to really fly. You know, breaking past 1800, maybe the next stop 1900, maybe coming near enough into these highs here. So that could be the next stop for gold. So there's a lot of room to the upside for gold. But yeah, the rejection we're seeing here, the buys look very short-term. So yeah, keep an eye out. If you're in the lower time frames, keep an eye out at 1780. You might squeeze a few pips back to 1790, maybe 1800. But for me, I'm looking at some buys here. I'll manage that trade quite closely if I do get those buys. But nothing quite ready for me on gold just yet. Okay, so pound USD. Okay, I'll take a look at pound USD. CHF JPY, of course. Official lens will be joining us at 10:45 right after Miko. Okay, nice. So 10:45, that means 3:45 my time. Okay, use JPY. Miko, any trade? No, I'm not actually any trade at the moment. I'm not too sure if I'll get into another trade this week because I'm actually quite busy tomorrow. So I'm not sure if I'll actually have time to manage the trade if I do get into one. So yeah, I probably won't actually take a trade until probably next week. But we'll see. If it's a short-term trade, I might be able to get away with it.
Let's go before 7. So this is what the charts look like to me early in the morning. So one thing I like to look at is market structure, especially on the 1 hour. It's my favorite time frame to look at market structure, okay? So I can see that we created a resistance up here. All right, and if I look to the left, because it's always important that you look at the history price, the last resistance is pretty much way up here, right? So to me, it seems like price is filling out an imbalance over here, and I'm not going to get too deep into that right now because I teach that. But long story short, we're filling out this last imbalance to the top side. We've created a resistance here. We couldn't even break this last high, so that tells me that price is probably going to come down. Okay, now if we go down to the lower time frame, right? If I take away this candle, because this is what it was looking like, if we go down to the lower time frame, I'm going to say, okay, if price comes down, where is it going to go? Right? So this is when I start looking for those next supports where I deem price can be. Okay. So if I'm looking at this, and we'll go back to the hourly because it's a little cleaner, the next support is around right here. Okay. If we go lower, you know, the more you get experienced in trading, the more you don't choose every zone. Some traders may choose this as the next zone, and that's okay, right? It's really going to be based off of your preference, okay? But I'm going to choose this, all right? And that's just based off of my preference. So I don't really need this anymore. My idea is that price is going to come down. We're creating a resistance here. So I'm going to go to a lower time frame. And I'm going to speed this up to right before 7 o'clock. Right, there you go. So this candle, actually, I'm going to take it away because that's not really what it looked like when I entered my sell stop, right?
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.